Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Joyce, Managing Director with Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100 across multiple timeframes. And Brian, before I hand it over to you, as you walk through the charts, why would a technician look at multiple timeframes?
Well, it's very important to know what your investment strategy is, and are you in a trade or an investment for an overnight or an intraday time period, or something, days and weeks, which would be like a swing trader, or more of an investment and a longer term type of play. So looking at, if you're a intraday investor, an overnight trader, you wouldn't want to be looking necessarily at monthly charts or weekly charts to try and figure out where you should be buying and selling. You really need to be zoomed in to those 5-minute, 10-minute period charts to see where the short-term support and resistance levels are, particularly if you trade in the futures market, which has a lot of leverage behind it.
Yeah, those are all excellent points. So I'm going to send it over to you if you could just walk us through different time frames and different levels that you'll be looking at.
Sure, absolutely. So so we came in this morning and we saw that the Nasdaq futures were down about 5% from yesterday's highs, not necessarily the overnight, but from yesterday's highs. And I'm looking at the futures also because the intraday charts are a lot cleaner than what the cash indices look like. And so we could see that we just tested today the 10,925 level. That was the low from last week and from the Friday before that, I believe it was, or the Thursday before that, just before the holiday weekend ending summer, Labor Day. So this is your clearly defined range right here, 10,925 on support, 11,565 on top. Whichever side we come out from here, it's the direction I think we're going to go from. And so that's definitely the levels that I think short-term investors want to key in on. Now, if we go to the cash index and the NDX and we look at the daily time period, we could see that we spoke about last week how we knew this pullback was going to be a little bit different than what others we've seen on the way up, was for two reasons. One, this rising trend line from the April low, pullback in April and April pivot all the way up had been tested so many times, so we knew that was important. So that was one right here on this break on Friday, 9-4. And then we also broke the support line in the daily RSI on that same day, Friday, 9-4. That support line goes back to April as well. We know it's important because the market tells us it is. It's been tested over and over again over those period of time since April. So what's different now is today we broke below the 50-day moving average. That had been support, 5, 6, 7 days in a row here, and we broke that today. So that's something to take note of. We haven't seen that that happen. We haven't even tested that average since back on April 21st when that trend line started that we've been looking at. So that tells us this correction is definitely different than prior pullbacks. Where are we going to go from here? Well, if I now look at my weekly candlestick chart, I want to kind of zoom out to see a longer term time frame. What's interesting is we did have the bearish candlestick pattern here at the top. We had a bearish engulfing pattern. Last week's range or price action was not necessarily constructive. We closed below the open and the bottom end of the range. This week, kind of the same thing. We're bearish engulfing last week's range. So one way to look at potential support from here is our Fibonacci level. So if we look at the Fibonacci retracements connecting the low from March to the high just a couple of weeks ago, the 38.2% takes us to 10,275. That in the cash is very close to the pivot low that we saw back in mid-July when there was a bit of a range there, 10,274. So that's kind of where I'm looking right now to see, or with an expectation that the price could get down to that level. We're down about 11-12% now off the highs. If we did get down further to that level, it would be about a 17% pullback off the top, which is a pretty meaningful pullback, but keep in mind, we were up 84% off the lows. That's, when you have these big ranges and these big swings in short periods of time, you can see, the reversal happen on pullbacks where you can have a meaningful pullback in a short period of time covering a large distance.
Yeah, it really is quite remarkable, the swings that we're seeing. I mean, even just the 6 months alone, it feels like we've went through a number of different market cycles, Brian. All great points there. Thanks so much for joining us on Trade Talks.
Thanks for having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.